China has traditionally been the largest buyer of US soybeans, but this year the situation looks very different. China has booked 0 bushels so far from the US instead of the usual 400 million bushels booked for this date. Instead, China has been purchasing more than 625 million bushels from South America for delivery over the next several months. That's business US farmers can't recover. And last year alone, between September and January, the US shipped over 800 million bushels to China. The big question now is what comes next for American farmers? To answer this and more, I'm joined by Chief Commodities Analyst at StoneX, Arlan Suderman. Thank you for joining us, Arlan.
Thank you. It's great to be here.
Arlan, let's start with the current picture. Could you briefly remind us why is China turning so decisively to Brazil and South America for its soybean needs? And how different is this from past buying patterns?
Well, it really continues a trend, maybe speeds up the trend that's been in place for quite some time. If we look back over the last 15 years, about 2011, we saw Brazil's currency start to break hard and to weaken relative to the dollar. So that meant that for China looking to buy soybeans would be cheaper to buy from Brazil when they have them available. And so that incentivized Brazil to expand production of soybean production. And so we kind of got into this mode where China would buy all they could from Brazil, and then whatever else they needed, they would buy from the United States. But as Brazil continued to expand, they got more and more market share. And then the trade tensions between U.S. and China simply have accelerated that as China has been building up its reserves for the possibility of a heightened trade war with the United States so that it could survive without buying any soybeans from the United States. And we're really getting close to that point where they can do so now.
I mentioned in the introduction that usually at this time of year, China would have booked 150 to 200 million bushels. This year, it's down to almost none. You said in an interview a couple of weeks ago that this is business US farmers won't be able to recover. In practical terms, what does that mean for US growers this season, both in terms of prices and unsold supplies?
Well, from a practical standpoint, I'll give an example. In the Northwestern Midwest and farmers in the Dakotas, Minnesota, a lot of those soybeans would be loaded right from the combine and onto rail and would be railed to the Pacific Northwest ports for shipment to China, because we would be aggressively trying to fill those orders even as we're harvesting them. And those soybeans would not need storage space, so to speak, because they were being moved out pretty quickly. In the absence of any orders for soybeans going through China, they're essentially not a rail bed in many of those places. So the soybeans, and they have a bumper crop in that area of the Midwest this year with likely record yields for both corn and soybeans. That means they have to find more storage space that they do not have. So whereas the bids for those soybeans might ordinarily be 75 cents below the nearby futures price for soybeans, this year they're twice that at 150 cents under, or even 170 cents under nearby futures. So the farmer is getting hit with low futures prices, but even lower cash prices because of that lack of demand. They're having to try to come up with a place to store it to hopefully capture some recovery in that basis. But overall, it's creating a tremendous problem for the farmers in that region. And China kind of joys in that because they know the farm sector is one of the biggest support groups for President Trump in the last several elections.
One theme we hear a lot about is biofuels and domestic crush capacity. How much can renewable diesel and soybean oil demand offset the loss of Chinese buying?
Well, they can only partially offset it at this point. President Trump's goal seems to have been to, in the midst of the trade war, support the farmer with domestic demand via the biofuel program. So every decision handed down to this point has been farmer friendly. Yet we still don't have clarity on our overall biofuel program. We started off the summer with 3 boxes to be checked off. One was the 45Z funding mechanism. The second was the RVO blending requirements, and the third was the small refinery exemptions. we finally got the 45Z funding mechanism in the quote-unquote one big beautiful bill, and it was very farmer friendly. But then it came down to the blending requirements in the RVO, which the U.S. Environmental Protection Agency released over the summer, and that was very positive as well. For example, ethanol production blending requirement at about 15 billion gallons for 2026. Biomass diesel blending at about 5.6 billion gallons for 2026, going up a little bit incrementally to about 5.8 billion gallons in 2027. So that was very positive. But what about the I should say one other thing. It also put in a caveat of 50% credit for renewable identification numbers. That's the mechanism for forcing the blending in the market, and one of the ways of financing the production, and put a 50% credit, RIN credit in there for imported feedstocks. So that looked pretty bullish for demand for the feedstocks. But then it went into the comment period, and it got a lot of opposition to the 50% RIN value from the oil industry. And then it released small refinery exemptions for years 2016 through 2024, and then eventually 2025, meaning that there were 2.1 billion, almost 2.2 billion RINs that could be allocated back. And so then it proposed here this week several alternatives for either reallocating all of those toward larger refineries, reallocating half of them toward larger refineries, or another alternative, some just taking input, anything between 0%, 25%, 75%, in a 45-day comment period. So the bottom line then is that we still are seeing a curtailment of production of biomass diesel because refiners simply don't know whether they're locking in a profit or a loss if they produce now. And so that's still curtailing production, curtailing demand for crush. So when you look overall, USDA has an estimate of about 2.5 billion bushels to be crushed this next year. That could be challenging to get if we don't get clarity soon. On the other hand, that compares to exports that has it around 1.7 billion, 1.68 billion bushels. That's likely to be ratcheted down if we do not get a trade agreement with China, with President Trump rumored to be moving to China or going to Beijing later next month during the APEC conference. There is some glimmer of hope that perhaps there will be a trade agreement that will force China to buy the soybeans in order to get access to the U.S. consumer market.
And are there realistic alternatives in the export market that could absorb significant US supply, or is this more about finding lots of smaller buyers?
It's more about finding lots of smaller buyers. China is the big buyer in the world, so to speak. They're the world's largest importer of commodities. We have seen, as China has pretty much occupied and used the full capacity of Brazilian ports to import its soybeans, that has pushed basis higher there in Brazil and squeezed out many of the smaller customers. And we have seen a return of some of those customers to the United States. So it's a partial offset, I would say about 10 to 20% offset of the lost Chinese business to this point. But still, without the Chinese business, we don't have enough domestic demand built yet. If we get this biofuel program built the way the Trump administration is trying to build it, then it can go a lot further toward offsetting, but that's going to take 2 to 3 years to develop.
And if China's pivot to South America is more permanent, what does the long-term future look like for US soybean farmers? Do you see shifts towards more processing at home, or even farmers moving acreage into other crops?
Well, in the United States, we alternate between corn and soybeans. That's where we get the best disease control, just through culturally alternating those crops. And so farmers like to keep in those rotations between corn and soybeans back and forth year to year. So they hope to be able to continue to do so. When we look at alternatives, it becomes more challenging. Certainly the industry is chasing other alternatives to develop the markets in Africa or elsewhere, but that's going to take considerable time to do so. Ironically, just yesterday, I had a group of clients in our office in the United States from Brazil, and they were asking me the same question because what they're seeing now is a growth in demand for the soybeans, fueling the expansion of production there as they take market share away from the United States. But overall demand in China is starting to flatten out. And so their concern is once they get that market share away from the United States and they're continuing to expand production and Chinese demand has flattened out, then where do they go? And the United States at least has a biofuel program that is well developed now and continuing to develop, but it's much further along than where it is in Brazil. They're a number of years behind where they need to be able to absorb the extra soybeans they'll be producing once they fully have filled that U.S. niche going into China. They're worried about what they're going to do with their surplus soybeans. So that continues to be a problem, not just for us, but in the future will be for Brazil as well.
Well, thank you once more for your analysis, Arlan. Great to speak to you.
Thank you.
For more videos like this, please do like and subscribe.